Big banks and major corporations like Yelp, Netflix, and Microsoft announced major investments in Black-owned banks.
Well, black banks have gained an additional $1.5 billion in lending power since the death of George Floyd, created by a $150 million increase in equity capital.
These banks attempt to help the so-called banking deserts, or typically minority neighborhoods where brick and mortar banks are far and few between.
In a perfect world, you wouldn't have the racial wealth gap. And so you wouldn't have the discrimination that created Black-owned banks in the first place.
People of color, African Americans in this conversation were historically barred from accessing financial goods and financial services.
Discrimination is still there, but it just looks differently. It's not as blatant. It's not just on face value, but there are other things like credit scores.
And the Black Bank really kind of emerged as a way of meeting some of those needs.
Black-owned banks are so critical when it comes to, supporting racial equity initiatives and the Black and African American community.
Black banks are far from thriving. Americans who identify solely as Black or African American make up 13.4% of the U.S. population today, but less than 1% of all FDIC-insured banks are considered Black-owned.
Are Black banks struggling? Yes. The banks reflect the community in which they are in. So whatever the struggles are of the community, the banks have the same struggle because they're enmeshed in that community. They cannot change it unless the community itself has more wealth.
So why are Black-owned banks key to ending racial disparity in America? And what do they need to succeed? The history of banking in America is riddled with incidences of systematic racism. Terms like redlining originate from banking practices that segregated populations of color by denying loans for housing. While the federal government eventually stepped in to resolve financial discrimination with legislation like the Fair Housing Act of 1968 and the Community Reinvestment Act of 1977, experts say that the banking industry still has a race problem.
The country has a race problem, one that is rooted in wealth and power, which are largely synonymous. Nowhere are decisions about who gains and controls wealth more concentrated than in the banking and finance sector.
We are not far away from the subprime crisis where Wall Street went to target Black and brown communities with their worst loans. The people who were sold a subprime loan could have been eligible for a prime loan. The financial crisis wiped out about 53% of the wealth in the Black communities, and that's wealth that hasn't been recovered.
I think we still see problems that are inherently baked into how we decide who gets loans or baked into how we invest in community. Redlining is still there, greenlining is still there, because most of the regulations, having been one, is focused around the fiduciary duty and the stability of the bank, not how they act in the community.
Accessibility is a big issue. Black neighborhoods have seen a disproportionate number of bank branch closures compared to white neighborhoods. Between 2010 and 2018, the number of banks in majority Black neighborhoods decreased by 14.6%. The disparity is even starker for major companies like JP Morgan and Bank of America. JP Morgan decreased its branches in majority Black areas by 22.8%, compared to a net decline of just 0.2% in the rest of the US. For Bank of America, it was 29.1%, compared to 18.4% in non-majority Black neighborhoods. In total, JP Morgan closed 55 branches, and Bank of America closed 95 branches in majority Black areas within the span of 8 years. When asked for comment, JP Morgan replied that as part of their $30 billion commitment to addressing racial equity, they've opened new branches in Black, Hispanic, and Latino neighborhoods and offer free financial health and home buying workshops. Bank of America said that 36% of its financial centers are now located in majority minority neighborhoods, with $1.25 billion invested in advancing racial equality and economic opportunity.
And none of us are above having to go to a local bank once in a while to make deposits, to take out cash.
In its void, oftentimes what we'll see is one of two things. Either we will see no availability to liquidity, that is, that there's no other place for people of color to actually access their money, or, and just as perversely, we'll see higher prices for that liquidity. That is, that we'll see higher interest rates, even in excess of say 20% or 30%, in order to actually access money.
Researchers have also shown that discrimination in loan denial and cost have not declined over the years, in spite of regulations that were designed to prevent them.
It is legal because of how we have defined risk tolerance, how interest rates are charged. It's legal for myself to be charged more than my white peer. And so I think that discrimination is still there, but it just looks differently. It's not as blatant. It's not just on face value, but there are other things like credit scores that people use, or geographic location, or asset value of your home.
The way that race has been used to provide subsidies for some communities and not other communities, and the way that discrimination works insidiously has affected so profoundly Black home ownership, which is much lower than white home ownership, Black wealth accumulation, which is 12 to 1, 10 to 1, regardless of income. And that is 100% on account of these racist credit policies and home ownership.
That's where Black-owned banks come in. Banks and credit unions must be federally designated as a Minority Depository Institution by the FDIC to qualify as being Black-owned. MDIs must either have 51% or more of their shares owned by minority individuals, or a majority of its board members are minorities, and the community that it serves is predominantly minority as well. As of 2021, there are 146 Minority Depository Institutions in America. 20 of them qualify as being Black or African American owned.
It allows people to have a certification and legitimately, one, signal to the larger community they are there to help them. Two, really put some guardrails, because these institutions, particularly much like CDFIs, are designed to serve communities that have been historically overlooked and underserved. So I would say the benefit of that certification is giving visibility to those folks. And I think it's also kind of elevated the fact that institutions, and certainly the federal government, believes that MDIs have a vital role in society.
Besides its designation, Black-owned banks work very similarly to traditional banks. They provide mortgages, loans, and insured bank accounts. What does make them unique is their mission to bring equality to banking, providing affordable financial services and education to people that need it the most.
When a bank has a branch in a community, people are more likely to get access to financial institutions, and Black banks, Black credit unions are more likely to locate in Black communities.
From a business decision, I completely understand if you follow the negative data that exists about us, why would a bank come? But obviously that's when the presence of Black banks realized, no, I don't believe everything I read. And I see that there's massive home ownership from, prior grandparents. I see that people are going to work every day.
Black-owned banks also support the economic life of the communities they serve by providing much-needed loans for small businesses, nonprofits, and Black home buyers.
We found that in the aftermath of the Great Recession, that Black banks on average actually expanded their mortgage credit access at a time in which arguably many financial institutions were actually fleeing the lending space. But I think the second part is, we're beginning to hear anecdotes, encouragingly, that Black banks are beginning to look to develop what are called special purpose credit facilities. These types of facilities will give more flexibility to all institutions, but including Black banks, that will allow them to provide credit to people who have been demonstrated to have been historically disadvantaged, or communities that have been historically disadvantaged.
The number of Black-owned banks has dwindled immensely over the years.
Are Black banks struggling? Yes. The banks reflect the community in which they are in. So whatever the struggles are of the community, the banks have the same struggle because they're enmeshed in that community. They cannot change it unless the community itself has more wealth and has more access, and we have less discrimination as a society.
Between 1888 and 1934, there were 134 Black-owned banks to help the Black community. Today, there are only 20 Black-owned banks that qualify as Minority Depository Institutions. While people who identify as solely Black or African American make up 13.4% of the U.S. population, Black-owned banks consist of less than 1% of all FDIC-insured banks in the United States.
I think part of it has to do with the broader trend in the banking community. That is that overall we're seeing the number of banks overall declining and assets being concentrated, particularly in your larger global and more complex financial institutions.
Black-owned banks still lack the assets needed to compete against major players. One United Bank manages over $650 million in assets as the biggest Black-owned bank in America. In comparison, JP Morgan and Bank of America each manage asset portfolios that are worth well over $2 trillion.
So the size of assets really determines what they're able to do from a lending and an investment perspective, which then, of course, drives how innovative they can be. It talks about, leads to margins in the bank and how many people can show up and what's the staffing look like and all of those kinds of things. And obviously, it's a big regulatory marker that people look on the stability and health of the institution.
To combat these concerns, several big banks and corporations have invested heavily in Black-owned banks following the death of George Floyd. More recently, Microsoft and Truist Financial backed FDIC's new fund to invest in minority-owned banks, each putting in tens of millions of dollars to help its launch.
With Microsoft impact investments, we always evaluate investments on impact first, then risk, then return. So really the driver here is what impact can we drive? The FDIC and Truist have been, critical partners in driving this forward for mission-driven banks.
Most experts remain cautiously optimistic about the recent investments made to Black-owned banks, but agree that there's still work to be done.
I think every corporation needs to look inside their own practices and see where they can themselves remedy some of the historic wrongs that they have done. And so it is great news when I hear about big banks and big corporations saying we're going to donate into Black-owned banks. A better way to get at this would be to look at the way that their institution has helped propagate, has helped perpetuate the racial wealth gap, and to fix, to repair, to apologize for.
But what's most important to the survival and success of Black-owned banks is the support and attention from average consumers.
I can't imagine that this country would want to lose and minimize our opportunity to create wealth for ourselves and for the communities around us. And with the demographic shifts and recognizing that I call Black and brown people the new majority, we're the fastest growing segment of the population. And if you take it down to businesses, Black women are the fastest growing entrepreneurs in this country. Not the same rate, but they're there. So from a quantitative perspective, I think everybody in this country should begin to care about Black communities because we are indeed taking over in a good way. States have already flipped where Black and brown people are the majority. And so as you think about the long-term economic viability and competition, it's important that we invest.